Hey, this is Sasha. Thanks for joining me in today's video. And what I want to share with you today is why volatility is an option seller's best friend. So if you're brand new to trading options, if you're kind of struggling a little with volatility, or if you're just brand new overall to our channel, stay tuned. I'm going to share with you some details about options right now. All right, so before we continue moving forward, just a quick insight here is if you look at our RISE, the number 2 LEARN website, you can see that we have Understanding the Stock Market and How It Works course coming out very soon. So at the end of the month, January 26th. So if you're brand new to trading and investing, definitely check this course out. It's a rework. We've reworked it from the ground up for our original course. And then coming at the end of next month in February, we have an option trading strategies book. So for those of you who are option traders, we're going to have a book that has risk profile pictures, all kinds of different things on there, how to set up the trade, how you profit, what happens with time, when that strategy works best, and much more. So I'll give you more details about that as it gets closer. Anyways, so with this in mind, I want to share with you some thoughts here about volatility. And a lot of people don't understand volatility. And you can see today what's happening is we have a down day. Today I'm recording this on January 7th, so it'll be a couple days before you watch it. But it gives you an idea of really how the market's functioning. So here we are with the S&P down about 10, Russell down about 9. And what you can see is my positions overall, when you look at the delta, is positive, right? These positive delta, which means I'm bullish on these positions, meaning I look for them to go up in time. But my volatility overall is also positive, and I'm still positive for the day, even though most of these stocks and indexes are down. So you can see it's fluctuating here and there with the bid-ask spreads, but ultimately you could see it's more or less positive right there. And the reason for that is because of this volatility. So when you look at this right here, this Vega, this volatility is a good friend of mine. It's my best friend, because when you're looking at selling options, and when you sell option premium, remember, when you're selling, it's good for prices to be higher, right? If you're a seller and you have a ton of cameras to sell to your audience or to your customers, it's better to sell those cameras for $1,000 than for $700, right? Because you make more money. Maybe you bought them at a lower price, but it's better to sell them for $1,000, even $2,000, $3,000. So the same thing here is that when I'm a seller, if I'm just selling options, I want them to be at higher prices than over here. So I'd rather sell for something like, $750 than $400, right? If you got an old guitar you want to sell, would you rather sell it at $400 or $750? You'd rather sell it at $750. And that's what we're doing here, is when we're a net seller of option premium, which is typically the type of trading that we do to make monthly income, we want those prices to be higher. And how do those prices become higher? Well, it's when volatility is higher. And why does that work? Well, because an option price is really determined from the price, the intrinsic kind of value of it. So it's that value plus time plus the volatility. And that volatility equation can play a huge role. As you can see right here, it's a big Greek for me. It's 445 versus my theta, which is my time decay. I'm only making about 113 a day on all these positions, whereas the Vega, if that volatility pops a little bit, well, all of a sudden it works out in my favor. And you can see right here, these positions continue to fluctuate, but ultimately selling at higher prices is what you want. Now, what I've done here is I've actually constructed positions that are more positive Vega, which means when volatility actually spikes up, I make money. Other times what you could do is go ahead and create positions where volatility contracts, you make money. But the point being here is that it's not about being positive or negative Vega. It's about knowing how to get volatility to work for you. And that's why it can be a great friend for anybody who's selling options, is that you could have it work for you when volatility pops, or you could have it work for you when volatility contracts. And you could almost be wrong on the direction. So you could see all my delta, which means the direction of the stock, is positive. So if I look at the S&P, and you can look at this position here, well, look what I'm looking for it to do. Well, I want it to kind of go to the upside. But even though it did not, and it's actually down today about 10 points here. You could see the S&P. I'm still profitable for the day, about $30, $40. And that's because that Vega is so big, because I was on the right side of the volatility trade, okay? And even with certain ones like a Russell here, you can see where I'm a little bit on the wrong side of the volatility trade here. It may not hurt you too badly if you set up the trade the right way. But you can see here, like with a trade like Netflix, this one has a bullish movement. And even though if Netflix right now today is down about almost $3 here, so you can see down $2.79. So I'm looking for it to actually go up. But you can see that even though it was down about $3, you would think my delta is positive. Well, I'm still making money, about $6 here on this trade for the day. And that's simply because of that volatility. So the long and the short of it is that volatility, you can make it work for you or against you. And it's really just about knowing and understanding how volatility plays in the market. Once you understand that, volatility can be a great asset for an option trader. And that's what I wanted to share with you today. Is it's a great market conditions to show you this concept of how even when price goes against you and goes against your trades, that when you have volatility set up to work for you and it works in the right way, it can be really positive to your account. So I hope you got some good thoughts and insights about this. I really wanted to share this with you because it's tough to time it perfectly to record the video and show the volatility side of things of how it can work out really well. But this is one of those. And remember that if you're interested in our upcoming courses here for brand new basics, just getting started in trading, check out Understanding the Stock Market and How It Works. That's coming out very soon. It's going to be a rework of that course. And for those of you that are option traders, we have an option trading strategies book that's coming out at the end of February. And of course, we have other option trading courses like our calendars course, where you can learn a lot more, 16 to 22 hours, some of these option courses that we have that go into the detail, really dissecting and understanding how to trade options the right way. Anyways, thank you so much for joining me. Remember to hit the subscribe button right here or join us on the newsletter list so you get announcements and news when we release these great products, as well as coupon codes, live classes, and live webinars that we have coming up, and things for our members. Thanks again, and I will see you next time.